Let's start off with your revenue increase. I mean, it's up around 13%. These numbers, of course, have been elevated by the fact that you have seen higher volumes. Your margins are slightly lower, though, down 1% to 19%.
Yes, we did grow sales revenues in the period to 13%. And this represented a 6% growth in volumes in Namibia, and some increases in sales also in our export markets. We grew operating profit to 199 million rand, and also profit after tax we grew up 7%. The growth in profit has slowed from the previous period. But this can be attributable to, firstly, some increases in input costs, but more significantly, we did invest heavily in the period into our portfolio.
Okay, let's touch on that investment within your portfolio. Brand investment is what we saw, and it actually resulted in a lot more sales over the period. Are you going to continue this strategy until you get sales to the levels in which you'll be happy?
I think brand investments and ensuring that our brands remain attractive to our customers and consumers in the years to come will remain a very important part of our strategy to come. In the period, we invested behind our Tafel brand, which is a popular local brand in Namibia, and this took the case of new packaging and also a TV campaign. Freedom of choice. We also invested significantly in our flagship brand, Windhoek Lager, and that's we did extensive research, and we've actually recently launched in March a great new contemporary, a new look to the Windhoek range, Windhoek Lager, Draft, and Windhoek Light. But we do see it as a very important part of our strategy going forward.
Bruce, if we could just touch on your joint venture with DHN Drinks, and despite the fact that we saw the portfolio growing there, we still saw an operating loss which was attributable to DHN Drinks. Lower than the previous period. When do you expect this to reverse?
You're right, we were very pleased with the Windhoek trademark in South Africa, and that has continued to grow, particularly marked in Windhoek Draft and the can variants. Losses, we did experience losses. They were within our expectation, and clearly we'll be working hard to reduce these in the periods to come.
So let's also touch on input costs. You alluded to this a little earlier, and inflation for the month of February coming in at 7.4% from 6.6% the previous period. Tell us about the internal inflation environment for Namibian breweries, and are you able to pass down these cost increases and pressures to the consumer?
We saw there's three aspects that we saw fairly significant increases in our pricing. Input prices, and that included glass prices, which we saw an increase of around 9% in the period. We saw the malted barley world prices increase fairly sharply over the last 12 to 18 months. This is coming down to more sustainable levels, and also our transport costs, which was impacted by the recent increases in oil prices and fuel. As far as passing on these costs, cost is only one factor we take into account when we consider a price increase. We are operating in the region it's a highly competitive market, so we look at a number of factors before we take price on our brands.
Yeah. Okay, so let's just touch then on the fact that you've actually seen cost increases across the board because you've had a lot of investment into brands, as we've mentioned. What kind of mitigating factors are you going to put in place to ensure that you maintain these margins at around 19%, but you also do not, of course, jeopardize the current investment scenario that is playing out for you?
Sure. Recently, we've made significant investments in upgrading our production facilities over the last few years, and this in itself has brought a number of efficiency benefits, water usages, electricity usage, but also we've got a program of continuous improvement So we'll be looking at, and we've got a programme to reduce our extract losses and our waste rates through the production processes. More particularly on the input price of malted barley, we have made a number of changes there to our buying strategy, where we buy frequently, we read the market frequently, we buy small, and it takes the peaks off. We've also contracted on a number of our suppliers in rand, so it also mitigates and hedges against exchange movements.
Okay, so let's just touch on the export market, because Zambia, Cameroon, Uganda looking strong, Zimbabwe slightly weaker, Botswana, you're holding your market share. Then you've got worries with regards to Angola because of importation challenges. How are you planning to ensure that these challenges are done away with across all territories?
I think we have different challenges, I think, as you alluded to, across the different markets we operate in. We have done very well recently in Zambia, and despite the contracting formal beer market in Botswana, we have managed to hold our share in that market, although the market has contracted quite significantly. We've also done well, and we are growing our brands in Cameroon and Uganda. We will continue to look to improve our route to market and also look to improve our format to ensure that we can get our products to our customers and consumers at a price level that we can grow our margins.
Well, Bruce, I mean, you mentioned very highly competitive environment, and we're seeing this playing out across Africa. How are you going to stay competitive in this very tough environment in Africa?
We've seen our brands continue to grow despite the highly competitive region that we operate in. We believe in our brands. We believe in the high quality of liquid in terms of that goes into making our beer brands, and we believe that we're bringing a product that the consumer wants and enjoys.
Yeah.
We have seen some contraction in some markets, but overall our beers are doing very well, and we've got a strategy that we will stick to, Destination F17, which includes continued significant investments behind our brands.
And Bruce, just lastly, with regards to focusing on South Africa as a very key market, what prospects do you have here in a very saturated market, one would say?
South Africa is highly competitive, and we are operating part of actually a joint venture down there. We operate part of the joint venture, and it's made up of African and international premium beer, cider and ready-to-drink brands. We do believe that the market will continue in its competitive state going forward, but we do believe in our portfolio and we do believe in our brands. So we think we will continue to grow, although it is a tough market.
Fantastic, sir. Thank you very much for joining us. Great to have you on the programme.